In today's video, I'll give you my 12-month price prediction for PayPal stock. Is PayPal worth $30 or is PayPal worth $200? I have done a decent evaluation to find out. In a previous video, I gave my worst case, my conservative case. In today's video, I'll give you my base case. Also, is Microsoft Xbox going third party? Now let's start with PayPal, then I'll dive into the Microsoft news. I'm Brian, the Finance Ninja. Oh my god, the last video did so amazing. Thank you all who watched it or thought about watching it. I've never had a video hit over 7,000 views. Thank you all who watched, liked, and subbed. That puts more pressure on this video. I need to make this video extra special. That's why I'm giving my price prediction in this video. This was Patreon exclusive, but I'm making it public. Get ready for a personal journey that ties directly into the world of PayPal and the incredible roller coaster that was 2020. After I set the backdrop, I'll go through my evaluation. Let's time travel to early 2020. I call this a mix of emotions. In the midst of a booming economy, some call it a Goldilocks era, I embarked on a new job while dealing with the recent loss of my uncle. Thumbs up if you've ever lost a loved one. It hurts. Now, while I was bearing with that loss, you were bearing with the tragic passing of Kobe Bryant. Feels like a century ago, huh? It's been only 4 years, however. Amidst these swirling emotions, a furry companion named Shamo emerged, becoming an enchanting regular in my videos, a mandatory inclusion dictated by none other than my loving wife. Shamo says to like and subscribe. But then the virus turned the world upside down. The pandemic hits. As the world braced itself for the onslaught of the unforeseen pandemic, reminiscent scenes from the cinematic masterpiece, well, pick your favorite zombie movie. The narrative took an unexpected turn. A nationwide quarantine enveloped us, prompting my workplace to transform into a permanent work-from-home sanctuary. An adventure unfolded as I raided my office for treasures. Monitors, chairs, and even desks found their way into my car. A nod to my office monitor here. Oh, another one here. Both silent witnesses to the unfolding drama. My home office became my workplace. It is where I'm filming this video. There was a silver lining here for me. Now, the winds of change brought with them unexpected blessings. No more enduring arduous 2-hour commutes or braving freezing early mornings. Oh my goodness, those are crazy. The pandemic ushered in moments of serenity, allowing me to spend quality time not only with Shamo, right here, but also with my beloved wife. It's crucial to acknowledge the challenges faced by many during this period, however. My intention is to share my unique perspective without causing any offense. And it allowed me to start this YouTube channel. Enter the era of the online shopping extravagance. Supplies were stocked, and the virtual aisles of e-commerce platforms witnessed a surge in activity. The real heroes emerged. Nurses and doctors, of course, but also Amazon workers who tirelessly ensured that daily packages arrived at our doorstep. Tech and growth stocks witnessed an unprecedented surge as demand soared in this new era. The financial landscape became a battleground where stocks soared to new heights. I will never ever repeat my 2020 performance in the market. It was simply remarkable. Doesn't stop me from trying. Tesla reached an impressive $400 a share, and it still hasn't reached that price again, while PayPal stock ascended to a remarkable $300. $300! Meanwhile, let's not linger on WeWork's fate. Oh, yeah. Tech and growth stocks reveled in an era of heightened revenues and earnings, with PayPal boasting a staggering nearly 21% growth in 2020 and over 18% in 2021. As the curtain rose on 2022, a stark reality check awaited. What we thought was a new normal wasn't. We entered a new normal, as I call it. We reopened. While many were still working from home, commerce shifted back to retail. Shortages skyrocketed. We had the chip shortage, the auto shortage, inflation spiked. It was as if Jimmy Carter was president again. The Fed, after first calling the inflation transitory, panicked and hiked interest rates to levels not seen since the 80s. Growth in tech stocks cratered. Tesla stock went from $400 to nearly $100. PayPal stock dropped 80%. PayPal's growth, once soaring, witnessed a dip to 8.5%. Was this a harbinger of the end of the golden age of prosperity? Now the spotlight turns to you, dear viewers. What were your experiences during the pandemic? If you appreciate the transparency and depth of my story, drop a like, and don't forget to hit subscribe. In a recent interview on CNBC, Alex Chriss said that PayPal will shock the world. He mentioned that PayPal is working on new innovations. 2024 is a transitory year. The effects of the changes won't show until 2025. When pressed on specifics, all he said was improvements on merchant conversion rates and to wait until their presentation on January 25th. Now I'll do another video then on that presentation, but let's get on with the valuation. After all, that's what you're here for. Now you can see the pandemic boom right here. But notice that 2019 was also huge. Now that was pre all this nonsense. Now I don't expect 2020 numbers to repeat, but I do think we'll see an uptick in revenue in 2025. How much? Oh, let me hide my face here so you can see the numbers. You're probably tired of looking at me anyway. Next up is financials, then my valuation model. While not recent any longer, the impact of the virus still affects PayPal to this day. During the height of it, people switched to online payments instead of in-store. This greatly grew growth at PayPal, with revenues growing 20.7% in 2020 and 18.3% in 2021. This accelerated growth caused PayPal stock to skyrocket to over $300 per share in 2021. This wasn't to last, however, with the global reopening, with growth slumping to 8.5% in 2022. PayPal shares have since slumped, currently trading at $65 per share, an 80% drop from the highs. You have to go back to mid-2017 to see the stock at levels this low. That's 6.5 years ago. Wow. You can clearly see the troubles the company went through in 2022 in the operating income. That's the orange bar. The top line was also stagnating in 2022. Now the numbers have improved in 2023, mainly due to cost reductions, including laying off 2,000 employees in early 2023, representing around 7% of the workforce. Things are starting to pick back up again in 2023. Share buybacks are here and they are big. PayPal repurchased $1.4 billion in shares in Q3, $5.4 billion trailing 12 months, reducing weighted average shares by 5%. How rarely do you see that? Now you can see the huge acquisition there in the middle. Other than that, cash flow keeps trucking upward. While debt remains steady. PayPal has more cash than debt. That's always a good thing. Given the numbers that I just showed you, does this chart make any sense? The up or the down? I don't think so. Now current market cap, $71 billion. PE, 19. That is cheap. PayPal, I've said it a million times, is priced for bankruptcy. I don't think PayPal will go bankrupt. Do you? Okay, so I'm assuming that PayPal does some work on the innovation side to increase revenues 12% in 2025, trending down to 5% growth in 2032. Now this is my base case. I think these are reasonable numbers. I don't think there's anything outlandish here. Now here it is in graph form. Wall Street gives PayPal a buy rating. Average price target is $76.27, a 23% upside, a high of $145. Can you imagine if we get to the high again? Now it's time for the DCF valuation. Let's start with the basics. DCF is a valuation method that estimates the value of a company based on its future cash flows. The idea is to discount these cash flows back to their present value, considering the time value of money. Now, why do we use DCF? DCF helps us account for the fact that a dollar today is worth more than a dollar in the future. It is a powerful tool for investors who want to make informed decisions about buying or selling stocks. The present value of expected future cash flows is arrived at by using a projected discount rate. Now, the WACC is commonly used to calculate the discount rate, but there are other alternative methods. DCFs are commonly used by investors to pick stocks. The whack-a-mole chart. You see, not only did high interest rates make money expensive, it also forces us to increase our discount rate. Now, I'm issuing PayPal a high discount rate of 9.73% due to a combination of today's high interest rates and their volatility. Please note that the higher the discount rate, the lower the valuation. This value might be a little unfair though, due to PayPal's stability as a company and the strength of their balance sheet. Now I'll just include the charts from my base case. With 3 quarters this year already wrapped up, there isn't really too much guesswork for 2023. I estimate that 2023 will come in at 8% growth, with a small spike in 2025, with growth dropping gradually down to 5%. EBITDA margin remains flat, taxes remain flat, D&A and CapEx remain flat as a percentage of sales. I'm actually using a WACC of 8% since the previous number, in my opinion, was just way too high. Perpetual growth rate, 3%. My base case numbers are next, but first, why don't you head on over to my Patreon? My Patreon special is only $1, locked in for life. You will get access to all of my investment reports and spreadsheets. I've got Tesla, I've got Nvidia, I've got PayPal, I've got AMD, I've got Microsoft, and many others. You'll also get exclusive access to my Patreon portfolio. Every transaction I make will be posted on Patreon as it happens. You can follow every move I make in this account. Watch in real time as I grow this into a multi-million-dollar portfolio. You'll never find a better deal. It only has a few seats left. Get in before it's too late. The link is in the description. This gives us an implied stock price of $106.61. Here's my multiple valuation. The multiple is 12 because of the high margins that PayPal has. This gives us an implied valuation of $100.07. Now what I do is I average the perpetual and the multiple valuations to come up with the implied share price. Here's the base case. The implied share price is $103.34, implying a 57% upside. If you want to see my conservative or bull cases, head on over to my Patreon. Okay, I'm going to show myself again. We're going on to Microsoft. Moving on to Microsoft. Now, I'm going to talk about a controversial topic that has been making headlines recently. Microsoft plans to publish some of its Xbox exclusive games on other platforms, such as PlayStation and Nintendo Switch. This topic was sparked by comments made by Microsoft CEO Satya Nadella in an interview with Bloomberg, where he said, "We love gaming. In fact, Microsoft Flight Simulator was born even before Windows. But we were number 3, number 4. And now with Activision, I think we have a chance of becoming a good publisher, quite frankly, on Sony, Nintendo, PCs, and Xbox." This comment raised a lot of questions and speculation among gamers and analysts, especially since there have been rumors that some of Microsoft's first-party games, such as Sea of Thieves and Hi-Fi Rush, could be hitting to other consoles in the near future. Many Xbox fans were outraged by this possibility, feeling betrayed and disappointed by Microsoft's apparent lack of commitment to its own platform and ecosystem. They argue that Microsoft is undermining the value and appeal of Xbox by giving away its exclusive content to its competitors, and that it is hurting the loyalty and trust of its customers, who invested in Xbox expecting to get the best and most unique gaming experiences. On the other hand, some people defended Microsoft's strategy, saying that it makes sense from a business and consumer's perspective. They claim that Microsoft is following its vision of making gaming more accessible and inclusive for everyone, regardless of the device they use, and that is maximizing its revenue and reach by tapping into the huge markets of PlayStation and Nintendo. They have also pointed out that Microsoft is not abandoning Xbox, but rather enhancing it with features like Game Pass, xCloud, and backward compatibility, and that it is still producing high-quality exclusive games for Xbox, such as Halo Infinite, Forza Horizon 5, and Starfield. So what do I think of this whole situation? Well, to be honest, I'm torn. On the one hand, I understand Microsoft's logic and motivation behind its decision to publish some of its games on other platforms. I think it's smart and ambitious to try to expand its gaming audience and influence, and to leverage its strength and assets such as its global network, its brand, its scale, and its data to create new and innovative gaming experiences. I also appreciate Microsoft's efforts to make gaming more diverse and inclusive, and to support causes such as financial inclusion, environmental sustainability, and social justice, as Nadella mentioned in the interview. On the other hand, I also empathize with the Xbox fans who feel angry and betrayed by Microsoft's move. I think it's unfair and disrespectful to the Xbox customers who have supported and trusted Microsoft for years, and who have bought Xbox consoles and subscriptions expecting to get the best and most exclusive games from Microsoft. I think it's also risky and short-sighted to give away some of its competitive advantages and unique selling points to its rivals, and to potentially alienate and lose some of its loyal and passionate fan base. I think Microsoft should be more transparent and consistent with its strategy and messaging, and explain clearly why and how it is going to publish some of its games on other platforms and what it means for the future of Xbox. So that's my take on Microsoft's plans to go third party with some of its Xbox exclusive games. What do you think? Do you agree or disagree with Microsoft's decision? Do you think it's good or bad for Xbox and gaming in general? Let me know your thoughts in the comments below, and don't forget to like, share, and subscribe for more videos on this. But who cares what I think? I want to know what you think. What are your thoughts on PayPal and Microsoft? Thank you for watching, and I'll see you in the next one.